we go.
And we're here. Okay. Hello, everyone. Welcome back to Farmers in Finance podcast, episode 15. Wow, we made it so far, Garth. What an achievement, I would say. Pat in the back. Especially today, you're racing back to make it to the studio.
Yes. It was a long day, long drive.
Congratulations.
Very long drive. Thank you so much. How's your week so far, Rico?
Yeah. My week was eye-opener. It's every week I do try to better myself 1% a day and be consistent with that. And what it takes, I think it's learning. And I try to learn every day. And every day, if you're open to it, like the learning, the lessons will come. Hard ones, good ones, bad ones. They're all there to contemplate and to evolve in a sense, right? And then having discussions about what matters in life, it's really important. And I am committed to continuously learning, and it goes, at the beginning of the year, you make your goals, and then all of a sudden it's like the end of the year, and now it's like, wow, okay. That was definitely better than last year.
Yeah. That's why reflections are important.
Hey?
Reflections are important, like what you did today. That's like reflection or awareness, like what you're doing.
100%.
How your last year went, what was your today, what was your yesterday, what did you, like even counting your breath is like a kind of awareness, like be aware around your surroundings. That's the most important thing if you want to keep growing in life.
That's well said. Kind of like whenever you said counting your breath, that's kind of like how you feel in meditation, like, and
Exactly.
And you went to sort of school so far in it, and
you can see the change,
and you're able, you wanting to teach people, right?
Yes, something new. Let's go.
How was your week?
Week was awesome. Good team trainings, and then overall, like work in India was busy, but like it's enjoying every day. Little one growing day by day, and like and learning new things myself, and then doing new things, and then enjoying this whole process. And we are about to end the year. So yes, I will also do reflect, like how was my last year, how can I make better the next year.
Yeah, right. It's like always at this time of the year, it's kind of like, things slow down in life, and everything just all your systems, just come down, and you have more time to reflect, to see how you want to better yourself next year. I'm getting more into reading as well, and just reading really, really cool books. So let's get started with the show. I got a little bit of notes here. So last week we talked about the Sprout family and insurance, and I had a little bit of a reflection about insurance, and also like the way you set up the team meetings as well, and there's so much to know that it's like, okay, this podcast could go forever, and there's so much information that I want to learn, but also I want to repeat it so that I even learn it even better, right? And as we were starting the show, you were talking about how I did that probate video, but that was just a result of the summary of what I learned. And I'm just like, oh my goodness, like a lot of people don't know this stuff. And it was, I did two different versions on my blog, and one of the blogs was about real estate and how it affects that, and what you should have in plan, have a checklist of things to do, includes of the event, right? But on the
Yeah.
accounting side, right, it was just running the numbers. And when I was, like, I was blown away. And I bet you very few people know what happens. And but that's my goal. I want to create a podcast that it's about teaching the numbers and teaching everybody. Like, I mean, sure, it varies. Maybe in India is a little bit different, but every system. I mean, we're both under English, like language and traditions and legal system and everything. So there will be similarities.
Yeah.
But so going back to last week, I just went on a tangent. Going back to last week, yeah, we talked about the Sprout family, how their insurance is being made, and how they went through we went through the process of layering and talking about a little bit about that. And what I wanted to do in this episode, just because of what happened in the last week, is talk more about what is insurance. Like, uh, as advisors, we really fail to really explain what actually
Yeah.
insurance is and how it has evolved over the
Hmm.
years. And
Yeah.
also, what I want to talk about is how are you protected? Like, that's the question, is like, are you protected? Have you sat down? Have you reflected on what you've done, what you're doing, and where do you want to see yourself, in the future, right? Like, talk about your future self, right? So let's get going. Obviously, quote of the day for today. This is from one of my favorite books, Atomic Habits. And James Clear says, "You do not rise to the level of your goals, you fall to the level of your systems." And this is like a huge tie
Hmm.
in why I picked this quote is because there's good systems, there's bad systems,
I'm not able to hear you. Ah, my
but
internet.
the fact of the matter is that and afterwards we apply it to our own lives, right? So
Yeah.
my belief in insurance, and I already brought this story before up earlier, and having an insurance in place, there was that loss, and then there was no payout from the insurance, but I was under. Okay, let me check my connection here. Let's see, what do we got? The connection is choppy. Are you choppy?
Maybe yes. My internet is breaking up. Like I'm
Okay,
checking
let me
it.
see if
Maybe my internet. No worries. Keep going.
is it your internet or mine?
Yes, maybe my internet.
Because
Not that stable here.
yeah, I just don't want it to be choppy and be recorded in the wrong way. Yeah, there you go. Let me try to change it. Okay, are we good? Okay,
Yeah.
we're good.
Very good.
It does say to create to connect it to the internet plugged in, because Wi-Fi is
Yes.
really resourceful,
Yeah.
especially
It
when it
always says.
streams across different platforms.
Hmm.
So Yeah, like let's talk about a little bit, like, like I wanted to talk about the systems and how insurance is created and how it adopts. Can I can we do this, Gaurav, and then just go back and forth, and I'll mute you because there's a few comments that are saying that there's a lot of background noise, and
Oh,
I
okay.
know I'm pretty quiet, but do you want to do a back and forth? Yeah. Okay, that's probably better. Okay, thanks. Yeah, so we just want to share a little bit because we are in this world where there is systems, and where did insurance come from? Where is that concept? Where is the theory, and the what was the problem that insurance was trying to solve? Right, a lot of people have this mentality or this belief about this system, that it's, in a way, it kind of could create problems. I mean, obviously anybody can have their own opinions, and from my story, like, it was about contracts, and it's the same thing about real estate. It's about contracts. You have to read them, you have to be knowledgeable, and everything in this world is created with systems, and those systems have contracts. Like, oh, like, the funny thing is, off on a tangent here, but the funny thing is, like, people are complaining, I think my phone is hearing me, that microphone is always on, how is that possible? And then it's like, well, it's in the contract. They state in there that they will collect all the data from you, all that analysis, and when you sign it, you give them the rights to do that. And that is why there is proper systems, like in the world of Apple or Microsoft, whichever platform you use for the usage of that product. You have to give them something, right? So, and there is an exchange, and so that's what a contract is. It's an exchange. Okay, I give you this, you get that. So why was insurance created? Well, it was like a community of people. Like, I mean, Garb might have a better story, but I sort of picture it as a community of
So,
people coming
should
together
I go for this one?
and protecting each other. Yeah, yeah, yeah. You'll share your story, and
So it
then
was
protecting each other and being able to, yeah, go ahead. No, no, go ahead. Don't worry.
so that community was first time they were the sailors, and when in 14th century the European countries like Spanish, Portuguese, and the Britishers they started to sail, and the few first governments and then the contractors were sailing like the guys used to give money to the ship guys, and they used to transport goods from different routes, like they're coming goods from India and then other places. And then they started, when there are goods then they're like thieves also, so they were started to loot by these pirates, sea pirates, and then they were like other things coming up like your storms and then all these accidents. And then like they were like, okay, I'm putting my whole load 100% on one ship, and if it sinks everything goes away. And same problem was with every sailor and every businessman. So what they did, instead of putting 100% on one, on the 10 merchants put 10% on 10 ships. So which means my stuff, your stuff, each and everyone has only 10% on one. So what it did, it was, so there are different terms on like basically risk assessment and risk uh, uh, diversion. So they diversified, or we can say they basically divided the risk amongst themselves. So they were there like, if ship goes down and my whole stuff is on that one, I will lose 100% of it. But if we divide 10 ships, divide 10% on each for 10 people, 10 merchants, if even one ship goes away, each one of them will lose only 10%. So by sharing the risk factor Okay, and pulling down the stuff, insurance came out. That was the first time, recorded time, when insurance was basically invented. And that's how modern times now have, again, like we say, modern need create inventions. So it has been reinventing every year. Where as soon as the banking going up, same is the today's time. Now everyone has a risk in their life, but nobody talks to each other. Insurance companies act as those consolidators in which they pool money. Yes, they pool money, every one of them. Nobody wants to lose the ship, but in case they lose it, they will have their money back. So that's how insurance came from, like 14th century or 13th century. The first recorded proof of insurance was there.
That's beautiful. I mean, and that's exactly where it stems. So it's a contract between many people that pool their money together, their resources, their energy, and to protect each other's. So you're mitigating the risk. You're creating a more stable outcome, because like if you put your load on 10 different ships, 90-80% will make it through the sea, right? So it's a simple tool, right? And then that is applied to everything that we insure, like your car insurance, for example. Like we are pooling our money together to protect each other, right? Like if something happened because you're driving erroneously, or there was a pothole, or you have an accident, at least if you hurt somebody or you hurt yourself, you're covered and you're protected. And there is also other explanations, but let's bring it back to life insurance. If in the event of an untimely death, or a regular natural death, you are protected. Your family is protected. Your legacy continues. And we talked about it last week a little bit. This way is the only way. I mean, obviously there is different ways, but this one is the safest ways and the more tax efficient way to leave a legacy. And that's why I started the show, how going through probate and learning about that, learning about real estate, and learning about, okay, now your primary residence is not taxed. That's tax free. But then you have a cabin or another plot of land, and that gets taxed. And then now you're getting a capital gains. And then you got your RSPs, like you put money away, and you save up all your life to have an income. But then sometimes, like you take away at 66 years old, just right when you started taking away from the funds, and then you leave that money to your family. But guess what? You get taxed 1 year. The whole amount gets taxed. When I learned that, I'm just like, oh my goodness, like how do people do it? This is just an erosion of money. And then I also wanted to mention that that's just not the taxes itself, but when we talk about insurance, we talk about pooled money. Like this is tax already being taxed money. It's already like, it's kind of like an investment, but it's more than an investment, because it's people coming together, and it's different from what the bank does. And was one of the other topics that we discussed this week, was mortgage insurance. Mortgage insurance is when the lender offers you mortgage insurance, is them protecting themselves. They don't protect you. So there is also, like, when the question of the show is, are you protected? The question is, who is protected in this case too? And that is how you find out. You find out through the contracts. So the number one thing is always read the contract, read the terms, read the conditions. Now we have great tools like ChatGPT and all these other tools. Obviously, you don't have to take them and you gotta review them because they still have breaks, but they help you at least summarize the contract, and you can ask them question. Hey, is this insurance protecting me or is it protecting someone else? Am I the beneficiary or is it someone else? And if we can use these tools and we can use the knowledge as well, because by inputting it into ChatGPT, you get the summary, you get to learn as well, right? Because you can ask her a question. Hey, can you explain this part about the contract? What does it mean? Can you clarify it? That tool works really good. AI has come a long ways. It has made life better for everyone, and it's also possible to do great research in that sense too, right? So that's what I think insurance is created. Am I getting the point clear across? What insurance is and what it does?
Yeah, very well said.
Yeah?
Yes.
Okay. Do you have anything to add?
You got most of it. Again, I say that people think in different way. Like one of the things we discussed, that it is a not a it's not a money which gives away or you don't have a benefit, but you're a part of a bigger pool in which something happens to part of the pool, they get paid. And with modern lifestyle in which we believe in disposable income, like our savings are ever time lowest because we believe in investments, but at the same time we believe in investments, we never believe in insurances. So investment and
Right.
insurances are basically not two different things. They're not against each other, but they go hand in hand. If we see, insurance is a kind of investment in which you don't have to save that much money. For every penny you get a dollar, so it is like 10x or 20x of investment, but for worst case scenarios. People do investments for good things like retiring good and everything like that, but consider insurance for bad times, that if something goes wrong, I have an investment done which is called insurance. And anything happens, for every penny I spent, I will trade a dollar against it. So once people see this as like an investment, and that's our job as advisor, to give benefits to client in a most simplest language, which even AI can't do it, which most of the advisors fail, is explaining insurance to to your clients in the most simplest way. First, second thing, assessing their situation and their need. Like we say that insurance product or any financial product has to be customized like a shoe, that one doesn't fit same for all. Same as insurance needs, and assessing them and providing that solution. So for advisors, these two things are most important thing. When I say insurance, like we can explain so much to so many people, but like our senior said, keep it simple and stupid. It has to be explained in the most simplest way, like what we did today.
Mm-hmm. And that's that's I mean, you brought up so many points, and again, it's a belief, right? Like as we take investments, and I'm going to use a couple of the things that you suggested in the team meetings this past week, if I may. And one of them was when we were having a chat, and we're advisors, so we kind of mastermind, and some of the objections are, what is the purpose, right? Like when people look at an investment, hey, I see a return, I see it growing, but when they put their money into an insurance, they don't see any benefits. Obviously, there is other insurance that we already talk about, the permanent insurance, but when we talk about insurance itself, it doesn't have any benefit for the person that has pulled it until it mitigates that risk, and then we see the benefit. And that as a financial advisor, we get to see it, and that's how we can transfer it to other people. Hey, I know investments are good, they grow your wealth, but let's look at it at a financial, what makes more sense. And one of this week's questions that you asked to the team was, what happens to how much in, well, let me start from the top. It was, how much income do you think you're going to make in the next 10, 20, 30 years? Right? And it's like, okay, I can calculate it, right? I'm expecting $5,000 a month times 12, that's 56. And then over 10 years, let's say that's 600,000, and so on and so forth. Okay. So come up with a number. Say we're 3 millions of income, right? And then you ask the question, what happens if you go away? All those people that are rely on that income, your family, your friends, yourself, right? And what happens? Who's going to replace that income? Name 3 people. And I'm like, oh, there was on that question alone, there is first, who are you going to have that can take that? Who are you going to give that sort of burden, let's call it, as it is, right? Who are you going to give that burden to? And to pick those people, it's pretty harsh, because it's like, oh wow, I don't want to do that. But I mean, I'm choosing right now. So that's like an inner question, right? And then you ask to name 3. It's like, wow. And then that's when I saw, okay, the only person or system that can do that is insurance, right? Like and this is how it was created. It was created to mitigate that problem, right? And so now, does everybody have this problem? Of course. Like everybody has this problem. It's not, hopefully it's not tomorrow, hopefully is many years away, but that problem is going to come, and there's so much more, because we live in a system that, like, there's other costs that we need to have in place, like money that we need to have in place to take care of those problems. But fundamentally, it's like these problems are mitigated only through the use of insurance. And it's like, when you list the 3 people, like I listed, my father-in-law, my mom, and all these other people, but it's people that I know they have more money. And why would I take their money, right? Instead, if I believed in the system, I believe in insurance, I believe in contracts. That's number one. I think contracts are the main thing that you have to have believe in, because that's the beauty of our system. It's not creating this confusion or chaos. It's creating structure. So that's why they're in place. And I believe that we are responsible for reading them, for making sure that this fits what your need and mutually fits the company's need as well. Right? You have anything to say on that, Gareth?
It's like, basically, again, I already emphasized this, that it is very important for advisors to understand and make them understand about like what that insurance contract actually means and how powerful it is. So it has come down to last word, so they know if and all, if and buts. Like there's one thing people say, that I want a cheap insurance, and then I ask them, like, do you want a insurance which has to solve your problem, or just you just want it because you want to name tag it that I have insurance? Like, what is the real purpose of insurance? So people don't understand like the real purpose. Once they understand the real purpose of the insurance, they will never see it as a cost. They will never see it a cost. So it's so funny that When people see it as a cost, people have money to spend on like things they don't even need, like another
Yes.
pair of shoes maybe, or another jacket, or just another coffee out there. And then like what I asked last week, like what those $10 mean to you. Like, so for so many people it was like something which they would finish in just few minutes, like cup of coffee, 5 minutes, 10 minutes of cake of caffeine, that's it. You go out there again. But will it ever save you from the bad times? No. They are, all of them are basically your friends of good times. Insurance is the only thing which is your friend of bad times. Nobody will come in like your good friends. They show up when you have hard times. Insurance is your that good friend that it only shows up when you have a hard time. And all the
Yeah.
good things, all your bad friends, like which are with you when you have money, like what they say, that you will find your fake friends. Then when you have money, they will be by your side. As soon as the money is gone, they're gone.
Yeah.
Same is your spending habits. Those are your bad friends. They happen to come and they keep you broke because they don't have value in your life. It just, we want to impress ourselves, or basically, like there was this line written that people are so scared of asking this question, that where are they heading in life personally and financially, that to keep them away, they make those mistakes again and again every day. And like drinking that coffee for $5 gives them a euphoria feeling for those 15 minutes, so
Hmm.
that that thought, of that scary thought, never haunts them. So just imagine and just write down all the habits which you do and which are non-productive, which gives you happiness. No doubt, you have to enjoy your money, but not at the cost of risk. That if something bad happens, then what? Will
Hmm.
Starbucks come give you some money back? They said, "Oh, you are a great customer. Why are you not in the store? Oh, I fell ill. Like I have a cancer. Okay, hey buddy, go take this $1 million." No, Starbucks will never give, never ever give you. So
No.
that's insurance for you. It is powerful. Just keep in mind that how to use that power, and you need a good advisor by your side, which can keep you, which can tell you the superpowers. And when someone requires it, that is the time insurance advisor's real job start.
Hmm. And more, because we also have like knowledge on the process, right? Like I'm starting all the processes, and a lot of people, for example, with probate, don't know. Like I've talked to many people that are shocked. Oh my God, I got to do all this stuff. Like I got to get the death certificate. Oh, I got to get talk to people. I got to find out where the will is stored. I got to read it. Oh, I'm in the executor now. I'm lost. Like it's so stressful while you're grieving, because obviously you were appointed executor because you're close to whoever the family member or friend was. So you're grieving, and at the same time you have to do this, because if you don't do it fast, you start losing the state. Like the video that I did yesterday, your state slows right down, because you got to maintain. Properties need maintenance, right? And you gotta, like taxes, they pay taxes, that you pay water bills, you pay electricity bills, you don't want them to be taken over, right? So it comes with a lot of issues and problems again. And like Gareth said, like you want to rely on somebody that you trust, and I take this to my heart, that being a financial advisor, but not just be a financial advisor, but also a friend. And the straight up, I'll give you the answers, how you need them, and how you need to do, and how you need to move forward. What I wanted to do is like, also we talked about insurance and why is it for, and like Gareth was also pointing out this past week, and we can bring it back to our EFA that we did for the Sprout family. And I just wanted to show, because sometimes people think, well, it's too expensive. It doesn't give me anything. It's too expensive, and I don't think I can afford it. And why would I spend that much money? But if we actually showed you a little bit of an illustration, and then we can just discuss it and be like, hey, for for 20, $30 a month, you can protect your family just in the simplest way. Because last week we talked about all the different types of insurance. There's it's different tools that we have at our disposal, different products that the companies offer us, and then we can use them regardless. Uh, as advisor, we adjust them to what your belief is. Like if you don't believe in insurance, but you still want the protection because you're taught that that's what you need, or you do have a little bit of an understanding, maybe term is good for you. If you want to take it further and become more involved, and that's the all say, in my opinion, is get involved with the whole participating life insurance. And then you become your own banker, and then you take care of your estates and your family, and you protect it for the future and build a huge legacy. So why don't we take a look at an illustration, and then show how it could be, we'll make the example of our family, the Sprouts, and then and I'll just add it to the stage. Yeah, if you want to add something until I set it up, Gaurav, go ahead. So we'll say 1 million, right? That was the coverage for our friendly Jesse. And we'll just put his name here, Jesse. This is Manulife. There's many companies that offer term insurance. We go with Manulife because it's probably a well-known insurance company, I would say, or investment as well. So we'll take, when we go through an illustration, let's explain. Obviously, there is a few terms that determine insurance, right? Gareth, we spoke about it this week too. One of the conditions and risk assessment is male or female. And unfortunately for us guys, the risk of death is higher than females because we're the go-getters. And Gareth put the example, we're the ones that go up the ladder. So we're the ones that take the most risk. Females are great. I mean, they're the foundation of society with their birth creating capabilities, but they don't take as many risks as like as seen, as viewed by the insurance company. Like insurance is a business, so they have to be obviously profitable, but they give you a better insurance. So we'll go with male so that we show the highest, and then obviously there's conditions about your health that determine as well the risk. Complicated, and as we all know, smoking is one of the worst conditions that you could have. So when it comes to insurance, because there's a higher risk of death, right? Like it's pretty straightforward. I'm sorry if you are a smoker and watching this show, but as a friend of yours and as an advisor, you better get off, right? Stop doing it. And then there is age. Obviously there's, as you're young, the probability of death is lower, and as you get older and closer to the death life expectancy, it goes higher, right? And we're lucky to live in a first world country where now the life expectancy, I don't know, what was the latest data? I think it's like 82 for men and 85 for women, or something like
So
that.
I would like to add something about age here. So
Yeah.
it's not the worry that you're gonna die early. The problem is that you're gonna live longer. That is the main
Yeah.
problem now. And according to the Forbes,
That's a good point.
there was this magazine when Manulife was talking about whole life policies and how it's gonna help our future generation. Why to have it for your kids? So there was a picture in which there was a newborn, and the new expectancy expected for someone who is born today or maybe after next 5-10 years is up to 150 years.
Oh yes, I've seen it. Like, was it the Time magazine that put
Yes,
out
it was a
a
time like this.
picture like that?
Yes,
Yeah,
yes.
yeah, because
So,
of the advancement of technology and even
well,
with the AI. Oh man, it's just blowing my mind now how they're
so
doing
many things.
predictive
Yeah,
analysis and like they're
yeah.
discovering stuff that it would have never been possible to discover just with experiments because they just create like what's it called like illustration. I want to say illustrations because
Case
I got
studies. They create those environments which are difficult to be manifested, or like
yes,
they predict 1,000 years from now, and then they create those environments, and then they create those models like test models, which are
yeah,
hard to even believe like it can be done. So that's what AI is doing for you.
yeah, and yeah, it's mind blowing and how we're advancing so quickly. And yeah, so like now the average age is 120, but obviously we're not at those times, but it's gonna get there. It's like in the movies when they repair the bodies and they got these zapping machines and then they grow your cells and they speed up growth and it just repairs itself. um, okay, so what we got here is Manulife as a health style sort of grading. uh, Oh, there we go. And it goes 1 to 5. And obviously, 1 is good, right? Am I?
It is
1
super
is the
good.
best.
It is the super good. You don't get it normally. You will get a
Yeah.
blood test done and your health done to get that one rating. It is one of the like you're Superman. Then
Yeah.
you
Yeah.
get like
Like
one
super
star.
fit, like an athlete, you eat healthy, you have a good regular lifestyle. And then 5, obviously, you're a smoker, you are really a couch potato, you don't do too much, and you drink like a sponge. So we'll put Jesse in between. I don't want to insult you, Jesse, but we'll just keep it normal in the middle so that we can include both sides of the spectrum. So, yeah, this is simple. We're going to start with term 10. Coverage is 1 million. And so term 10 means that this coverage will cover you for 10 years from the age of 45, then Jesse's 45, to the age of 55. The coverage that we're insuring is $1 million. So in our case, this will cover the mortgage, the predicted income for the next 15 years. It covers the expenses and everything that we did in the past episodes. And then it's simply, we can just calculate. When we calculate it, it just gives us, the total premium monthly, $80.82. And then when we want to get a better illustrations of how the years go by, then we can get the reports done. But this is the simplest, easiest way to get covered for $1 million, right? Then there is other terms. We can switch over to the other terms. So there is term 20. And as we can see, the cost goes up because we're covering for a longer period, right? And so if you started off at age 45, by 20 years, it'll be age 65. So now you're starting to get into your retirement years. Now, what system for $141, let's say $142 a month, gives you coverage for $1 million that is out there? So this is like, if we multiply, let's say it's $150 times 12, That's for, let's say, for $2,000 a year, you're covered for $1 million for the next 20 years. So your total investment is $40,000, and you're covered for $1 million. I mean, what else can do that? Like, can an investment do that when you put in $40,000 and you get $1 million in the event of death? I don't know. If there is, please let us know, because we want to learn about it. It's important to understand the concepts, right? Um, let's say you're younger, right? Let's change the year around and show you what happens when you're younger and you do these things earlier in life, right? All of a sudden, your term 20 gets lower, right? And the drum roll. Again, this is heavy on the application, but yeah. And then I want to show you too, like, what happens if you're a female as well. Oh, it didn't work. Term 35 monthly. No, it's not. Oh yeah, it's saving, because it creates the whole thing. Yeah. Do you have
I think
anything to add, Gareth?
it already showed it $50. That's it.
Oh, it did? Huh.
Yeah, I saw
Weird.
it like 50, coming up to be 50.
Okay, so it was $50. Again,
Yeah.
that's a huge reduction when you start early, right? And
Yeah.
and then we can fit in our other product, which is term 65,
Or
because
you can change
hey,
the male female, and we can see the difference again.
yeah, that's what I wanted to do next. Um, yeah, it's a little bit slow, but obviously this goes to show the opportunity that this creates. And obviously it's not for the life opportunity, but there's other products that help us do that. This is just the basics. This is just how we can, this is the simplest way we can offer you peace of mind. This is like peace of mind coverage. It's just like if you're driving a car, you wouldn't put, like, $10,000 insurance, because that's not gonna cover anything if you get into an accident, right? Usually we put 1 million or 2 million most of the times, right? So and that's the other thing too, that when I was reading this book, it says, Becoming Your Own Banker, Nelson Nash says, you put insurance on a car, and there is a chance that you can be the safest driver all your life, never get into an accident. So you're putting insurance on something that could possibly never happen. And that's what we all wish for, right? It's for something to never happen. But you don't even consider putting insurance on something that is guaranteed to happen in the future. It's a definite future event.
Yes, and that's the
Let that
death.
sink in, right?
Yeah, everyone has to die, and if they don't consider this, okay, like it's not a matter like you're gonna die tomorrow, day after tomorrow, or when it is. Important thing is that's it's gonna happen for sure, and for something which is that much sure that nobody in the world has survived it. There's no brain game that you're trying to avoid that opportunity to make or break for your generations to come. You can give generational depth to your family. Again, find those three people who can pay that amount to your family. Like, even if you don't write them, maybe someone will stand by you and maybe little bit help for you. But on the other hand, if you choose to protect you and your family in your terms and forever, this is the only chance to actually leave a legacy for your family. That's the only chance.
Right. And that's exactly it. And then what a lot of the examples that we take, and we don't want to sell because of fear. I mean, I believe it's the wrong thing to do. Yeah, I
Yeah.
think it should be selling through knowledge, selling through, I'm giving you
Away from.
value. I'm giving
Yes.
you value with this show, and you go out there, you research it, you make up your mind and find out, okay, maybe what I'm talking about is right, or maybe what I'm talking about is wrong. Because, I mean, we come across, like, as financial advisors, like, oh, have you heard of this guy? He set up a GoFundMe page to get donations, and it's like, it's pretty harsh. Like, GoFundMe first was started to pool money together to improve and make businesses and believe on ideas. Somebody comes up with an idea. Hey, I want to create AI. Oh,
Oh, I
okay.
never knew that.
Right? Like, it
Awesome.
was just to do that, right? Like, to create and better and fund, and creating, like, crowdfunding. That's why it's called crowdfunding, because
Yeah.
it's to fund ideas and purposes that can help and make society better, right?
Yeah.
And then all of a sudden, unfortunately or fortunately, I mean, again, it solved a problem where it actually helps people that don't have that protection, didn't have the foresight to be like, oh, this will never happen to me, or
Mm.
have that consideration of, like, well, if I spend $50 a month, I don't have to think about this problem. Maybe in 20 years or 30 years, whatever you set terms up for, right? And it's like, oh, but I can now rely on crowdfunding, and instead of being the three people around you, well, it's 100 or 200, whoever you reach, right, with the post. And
Yeah.
now we're, like, leveraging on the empathy of people. And I mean, nothing wrong with it, but think of yourself, your future self. This is the book I'm reading. Think of yourself in the grave, or in the spirit, as you are, and asking people to pay for your mistakes. Because at this point, if you know about this, you know about these products, and you have the knowledge, now make that decision in the future and be like, would I ask people, hey, shit, I didn't think about this, or I didn't do what Rico told me, or what Gaurav told me, right? And
Yeah.
now I'm relying on my top three people to give for me. Oh, or you were sharing a story about your friend and his family, that he just passed away in a horrible accident, and now the family has invested everything, because there's such a family structure in India that the kids, the parents want to pay for the kids, because then the kids will pay it back. There's this family, sort of, I help you, you help me
You
in
have.
the future. So
Yes.
they invested everything in the kids' education, and then he passes away, and now they want to get their body and grief back, and now they have to ask people for money.
Yeah.
And I mean, it comes together. The community always comes together, but it's just like, why don't we tap in the bigger community and grow for betterment? Because also, what insurance company do, and we didn't speak about it, is how they use that money, right? They have to grow it, right? So they're investing it. They are the true crowd founders. And this is how, like, I know a lot of people know Warren Buffett, right? And how he made his money is through pooling money together. And because he was a visionary, he understood the market, he invested in companies that created earning capabilities that had a future, right? And he still makes money. He hasn't retired. The guy's a workhorse, right?
Yeah.
And he's creating wealth for many people and many other companies, and that's the beauty as well of insurance. You use the best minds that have the best knowledge by just giving them pennies, and they give you back protection, right? Maybe we could just leave it at that. That's the show.
Yeah.
But yeah, again, sorry it didn't work so well because I think it's not displaying. The calculation part is just off too. I'm gonna
No,
get better at this.
what? No, it's not you. It's the Manulife portal that's weird acting up, because
Yeah,
we are at the end of the call, and what
yeah,
we gonna do next time is to like basically present illustration along with the illustration of the mortgage insurance, because
yes,
our next topic is mortgage insurance. And what we're gonna
yes.
do is we're gonna do like two illustrations simple on Excel, like the simplest way to do it for Excel, and we'll do it for a Sprout family same way. We'll do two ways. One, they trusted bank and they got the mortgage insurance, what happens after something happens. And second one, but it will be followed up before by basic differences between a mortgage insurance and having a personal insurance, so we can highlight the main key differences. And that's one thing which is very important, because at some point of time 90% of people have mortgage insurance through their mortgage advisors. So it is very important to know like why. No doubt insurance is good, but again, which insurance is best for you. You can keep wasting money on so many things, like mortgage insurance is one such thing. I have to say that, because if claim ratios are below 50%, then why you name it insurance? Like name it GoFundMe, like same success ratio about raising the money. And what we're gonna do is to tell you the theory about it, like how they differentiate, how your personal insurance is better for you, better than a mortgage insurance. And then we'll run the illustrations in form of like what it actually means, like those differences, what it actually means in longer run on your pocket, and how it looks like when you change your mortgage, when you change your provider for the mortgage, or you actually don't get it, or you get it for a couple, or like bunch of stuff. We're gonna do permutation combinations, and it will be like more on the number side. So I will ask everyone to be on the bigger screen so they can see numbers very clearly.
Hmm. Yes. Well said. Yeah, love that topic too. Uh, and that was another discussion we had this week. So I'm looking forward to what we see this week coming up in our
Yeah.
team meetings. Yeah, we're coming to the end of the show. Again, thank you so much for being here with us. Thank you for your comments. It's a pleasure to be surrounded by people that want to learn just as much as I do. And thank you, Gaurav, for coming on and
Welcome.
making it on time every time. And your wealth of knowledge. I love how we can, talk about it and connecting it to farmers. I'm sorry we didn't talk about farmers too much. This was way. I needed to get this insurance thing off my chest, so I did, um, and
It
explain
means
it.
for it means for farmers as well, like whatever we are discussing today about health, age, because in the end they're also humans. It's just like type of risk changes with your business, but in the end insurance is made for all. Like again, we are farmers, and we are farmers in finance. So we'll keep farmers at the core, but again I say humans above all. So farmers are also humans. So with
Yes.
that, I will say thanks, Rico, for having me on this podcast, and keep it going. We have been doing it consistently since August, and I really appreciate you for what you're doing, and bringing our team meetings on a bigger platform. And I'm sure that today, tomorrow, or one day, there will be someone who will get benefit out of this, and that will be the day that we really feel like kind of gods. That's my
Yeah.
manifestation. And
Yeah.
so yes, I'll say bye for now.
We're,
Good night from India, and have a nice day, Rico. And
thank
thank you,
you,
everyone.
Gaurav.
Yeah.
Yeah. Thanks, everyone. Tune in
Thanks.
next week. Same time, same place. Have a
Same
good
place.
time. Have a good day now. Okay.
Good day.
See ya.